All right, everyone, here we are with ticker symbol WKHS, Workhorse Group Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors, and to all my subscribers, welcome back. Let's jump into this chart. So Workhorse had a recovery here, broke through the 50-day moving average, had a bullish run, and it reached highs today of $30 and some change, and quickly fell back down. But let's go ahead and move these numbers to their new locations, our resistance level and support. And our support levels are slightly moved up, as well as our resistance. Now, if we look at this zoomed out, there has been a slight recovery. It leveled off, and now the recovery happened again. We hit close to $30 and some change, but remember, the most important number is way up here at $31 and some change, but quickly it got rejected again. So these high numbers up here are super important numbers for the coming days for this stock. And way up here at $30.58, that is an important number for the bulls to break through. But before getting there, obviously the bulls need to maintain themselves above the 50-day moving average, which is 26.48. I'd write that down. That lets us know on what side of the chart we're in. And that was slightly touched earlier in the day, a little bit below that, when it was the previous 50-day moving average. And as it continued to move up, it actually now hit 26.48. So this is a very important tug of war right now between the bulls and the bears, and the bulls are going to want to maintain control and stay above the 50-day moving average to be in bullish territory. The moment 26.48 gets crossed in a downward direction, we end up in bearish territory. So right now it's at 27.32, and for the bulls to maintain control, they have to break through the highest point before this dip, and that is 29.42. The bulls need to turn that into a support so that they can start to work their way up to newer highs and newer resistance levels, maintain themselves above the 50-day moving average, and pull themselves further away from it in an upward direction. So 29.42 does need to be broken through and turn into a support. I want to emphasize that the bulls need to break through 29.42 so that this can start to work to newer highs and newer resistance levels. Now, there is a slight resistance level here, which is kind of like a peak that just got hit a couple hours ago, and that's 27.62. That's a reference there that you can look at to have a sense of direction where this is going. But again, 29.42 needs to be turned into a support and break away for the bulls to hit newer highs and newer resistance levels. On the other hand, we have what the bears want. And the bears want to cross, first of all, the 50-day moving average, which is 26.48. And then start to work their way to newer lows. Now, if the bears are able to hit this point, which is the lowest point in this bearish run, and now we have a slight recovery that's leveled off at 27.32, the bears are going to go ahead and try to break through the support level. It's the lowest point reached in the day, and if they accomplish this, they've accomplished two things. They broke through the 50-day moving average, getting into bearish territory, and they broke through the first support level in bearish territory, which is 26.28. And if that gets broken through, this could start to hit newer lows and newer support levels. So it's super important to keep in mind and pay very close attention to how the stock is reacting and paying close attention to the tug of war, because this is a really close one right now. And the 50-day moving average does not stop for anyone. It's catching up to the price every interval, every minute, every hour. It's catching up to the price. And if that catches up to the price and the bulls don't do much about it, and they kind of move in a sideways direction, by default, this can end up in bearish territory, giving some leverage to the bears. But the bears are going to try to do that before waiting for that period, and that's bringing this one down, breaking through the 50-day moving average, and breaking through the support level of 26.28 to tear this one down and hit newer lows. So that's why I emphasize pay very close attention to how this is reacting. How quickly is it moving to newer lows? Is it kind of hanging out in that area? Are the bulls trying to reappear? Put your 1 minute, 5 minute, 15-minute charts to check it out, and also look at the inflow and outflow of stocks and who is buying more. Are there more bulls jumping in, or are there more bears jumping out? And check that out for yourselves so that you guys can make your own rational decisions. I hope that with these cues, you guys will be well equipped for tomorrow's trading day. As always, if you found this video helpful and informative, please do so and subscribe. But don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button and let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.